You were listening to ChartingWealth.com for Friday the 4th of August, 2017. We see that stocks are down for the day. Both the S&P 500 and the Qs, that's the NASDAQ 100. We see that bonds are up. That's the 20-year Treasury Bond Fund, TLT, up for the day. Big time up, actually over 1%, and gold is up just a little bit, 0.16%. Let's go to our weekly chart and jump into the S&P 500 now. Those of you who are serious about what we do here, I want you to please be filling out your daily market worksheet as we go through this. 10 minutes a day is all we ask. That daily market worksheet is prime key for you to get the most you can get from our training and education. Why is that? There's something magical about you writing down what you see happening. That daily market worksheet is available and free for any and every one. You just go to the website chartingwealth.com, sign up for our daily market review. You'll get the link to the daily market worksheet, the weekly market worksheet you fill out over the weekend for the market opening on Monday, and of course the trade worksheet you fill out every time you do a practice trade. Folks, if you don't do this, you're wasting your time with what we're doing. I know it's fascinating and interesting to watch, but spend just a few minutes as you listen filling out that daily market worksheet. Please do it if you want this to be valuable training. Now let's talk about what's going on. We're going into our fourth week of up movement on the S&P 500, but what do the charts really tell us? They show us that the market's topped off somewhere right around 248. It's not going above that, down for the day 0.19%. There is not enough momentum in the market to push so far the PPO, the price percent oscillator, which is our number one most accurate indicator. There's not enough energy to push it over. It is still in a confirmed down move after it crossed over going down back on the 23rd. The market went down 2 following weeks, and that it was the 23rd of June. 2 following weeks ended on the 7th of July. Then for the last going on 4 weeks, the market has been trying to move up, but it's really stalled after that second week of up movement right at about 247. Derivative oscillators continuing to gain energy, but that doesn't mean that we have a weekly vertical crossover. Hasn't happened. If there's a big up day on Friday, yes, it could push it over, but again, the market looks like it's trying to top. Now, as we delve into things, look at the 2-day chart. What do we see? We see the price percent oscillator. The blue line is heading toward the red signal line. The blue line's heading down. That's the PPO. The red signal line is heading up. Derivative oscillator, which are the green boxes in the back, are losing energy. We can also see that the market topped out in the morning on, this is the 2-day chart, on the 2-day candle ending on the 26th of July. It has since slidden sideways, tending down. We have so far a doji that has been drawn. Our latest candle is a doji. Means lots of indecision. It's a red doji. It's preceded by a green spinning top and a red spinning top. Again, market is lower than the high it reached of 247.80 back on the 26th of July. So we'll continue to watch. Hasn't crossed over going down yet. If it does, of course, we'll be looking to jump in because we already have a triggered down move on our weekly chart. Remember, the 2-day and the weekly have to be moving in the same direction. What do we see going on the 4-hour chart? Well, it crossed over going down all the way back on the afternoon of Tuesday, Wednesday, the 26th of July. So again, we'll keep watching to see if and when a trade occurs. We will keep you posted. What's going on now on the Qs? The Qs down 0.39%. Derivative oscillator, unlike the S&P 500, which is positive on the derivative oscillator, the NASDAQ 100, or the Qs, is actually negative, as is the weekly price percent oscillator. The Qs also is topped off somewhere back about 3 weeks ago on the week ending the 21st of July, somewhere around 143, 144. So as we look into the 2-day chart, what do we see? 2-day chart also appears like the S&P 500 to be losing energy. It broke through the 2-day trend line all the way back on the 2-day candle ending on Friday the 28th of July and has been sliding sideways and down since then. Derivative oscillators losing energy. Looks like the price percent oscillator is heading over to a crossover going down. Hasn't happened yet. We'll keep you posted on what's up with that. What's going on the 4-hour chart? Well, it crossed over going down actually all the way back on the afternoon of Tuesday, the 25th of July, popped up a day after that, and then, of course, has been rotated over, going down and sideways since then. We'll continue to keep an eye on things, let you know how things progress. Perhaps this market has topped. Again, remember, we are trend followers. Until there's a trend set, we don't make forecasts. Forecasting is for the weather guys, and they usually get it wrong, or many times they do. Now let's keep going. What's going on with TLT, the 20-year bond fund? It is in a confirmed up move on the weekly chart. We see that the weekly was trying to move over going down on a couple of occasions and has now bounced back off as far as the PPO, the price percent oscillator, is moving away from the red signal line. We also see what appears to be the derivative oscillator not going down as much as it had. That downward momentum appears to be slacking off. And of course, we have a green spinning top up candle. Again, spinning tops typically mean some indecision there, but it is tending toward up. So that's where we are. Confirmed up move still on the weekly chart. That goes all the way back to like February the 3rd. So we have seen bonds trying to move up and moving up for the most part since February the 3rd. What do we see going on as we look a little closer? And again, remember, as we talked about over the last few days, bonds typically are inversely related to stocks. They're a safe haven to run to when the stock market's not doing too well. So if the market does really push over and gets a confirmed move down, you can expect bonds to continue to move up. Is the market telling us that's what is happening with this huge bump up in bonds on this last 2-day candle, up just for the day on Thursday, 1.03%? Well, we'll have to see. It's trying to cross over going up. Of course, when that crossover is confirmed, then we want to look for every reason to jump in on the 4-hour chart on an up move. Hasn't happened yet on the 2-day. Sure is trying. The derivative oscillator's already crossed over going up. On this 4-hour chart, it crossed over going up back on the 1st of August. So again, we will wait and see once we have that trigger go off on the 2-hour chart crossing over. We will let you know. But right now, things are looking nice. Maybe it's a portent of the market moving over with bonds moving up like they are. We shall wait and see. We won't call it until we see it. What's going on the gold chart? Of course, we now look like, unless gold takes a real dump tomorrow, a dumping off of energy, we see that gold is probably going to be, by the end of the week, a confirmed weekly vertical crossover going up. We'll let you know on Friday if that occurs. Everybody who signed up for the texting service, you will, of course, receive a text as to that. Looks like the derivative oscillator also is blowing off all of its downward momentum. As we look a little closer in gold, what do we see on the 2-day chart? We see that we've had a little bit of back movement on gold. It was up for the day, like we said, just a little 0.16%. Derivative oscillators continuing to gain energy, and the price percent oscillators continuing to move up even with that red open box down candle. Let's look at what's going on the 4-hour chart. 4-hour chart has crossed over going down. And remember, unlike all of our other charts, this 4-hour chart is a potentially total trading chart for you. And when it crosses over going down, pay attention. Now, watch it go down. Some of you may have already reverted over to a down play on gold in an inverse fund such as DGZ. Again, thing we don't like about DGZ is there is a wide spread between the bid and the ask. But again, this can be more of an intellectual exercise for you on gold, just watching what goes on it. Hopefully you pulled the plug on the beautiful up move that you had from about 116 all the way up to $120 or so. Again, be careful if we see a crossover again on gold soon on that 4-hour chart, you can sure look to jump back in. That's where we are at the end of the day. Hope you're filling out those daily market worksheets. Please be sure to follow us on Facebook, Twitter, Instagram, YouTube. We'd love to have you subscribe at our YouTube channel. And of course, please go ahead and become a subscriber at the website, chartingwealth.com. We'd love to hear from you. If questions, problems, concerns, we're here to try to answer those for you. Write us, cw@chartingwealth.com. God bless, all the best from the entire team here at Charting Wealth.